let's cover catching large moves, have a range of questions related to the quick scalping with the diamond signals in alignment with prevailing indicated trend or momentum. Completely, traders get it, makes sense. Now we're getting a range of questions on, hey, I want to catch large moves and I want to do it fully automated. So there's Traders Post, which is one of the third-party tools where you can take signals that are on the charts, like our trend bias, the trend bias, PFS, prop firm scalping, trend bias, and take these signals and turn it into automated trades. And now that I'm spending more time, and remember, Claude AI now connects to TradingView, the desktop version. And when you're using that optimization capability, having AI help you with determining what Renko timeframes on 1 second data using a premium TradingView subscription, then taking the PFS trend bias tool, the solid line, and then going off and on oil, gold, Bitcoin futures, ES, MES, NQ, MNQ. Hey, what settings give me the least amount of flips back and forth per unit of time in relation to this time frame, and then that time frame, and then that time frame? Meaning, start looking at like a 8 Renko box size, and then a 9, and then a 10, 11, 12. So kind of going up from there at least for the MNQ, and the same exercise if you're doing oil, gold. Some mind-boggling, amazing trend bias trading on gold and oil right now. It's good on NASDAQ, but holy cow. And the trend bias tool, it looks like an adaptive step moving average, which I wanted it to look that way because it's easy to derive signals from it. But some of the brand new, let me try to explain this. It's math. This is all new math. So take an indicator like a car, take the engine out, put a new engine in. The new engine in this one is the best math I've ever been able to find to ignore certain types of cyclical price activity. And then how it kind of does it, I guess the best way to explain it, which is different. I have good cyclical math, but this one's different. This one that I have running on TradingView. And what it is, when the indicator is looking back, you can mathematically say, hey, an X amount of bars back, what are my peaks, as far as the cyclical activity, and what is the trend of the peaks? Are the peaks dissipating in height? And then what's happening with I shouldn't really say peaks as much, but what's happening with the pivots of prices pivoting and changing directions in that cyclical up and down activity. Like back in the past, they used to use sine wave weighting, and that did an okay job. And then I found better math over time. This one's really good. So it can have the indicator look at, where's the low pivots? What are the low pivots doing? Are they breaking and going lower than prior ones? X amount of bars back from each plot. So at each bar close, the indicator can look X amount of bars back, not only at the overall trend of price or direction of price, but what's happening. You got to pay attention to cyclical activity. The amount of time that institutionals come in and cycle prices they're working in or out liquidity is that pattern of price activity is increasing on all markets. So you have to account for it. Old indicators can't. The indicator will be like, here would be green, then purple, then back to green, then purple, even though the line's flat. Well, that indicator is worthless to me. Then I'm like long, short, long, short, long, short, if that indicator is commanding automation. So that's what the difference is. It's the engine in the car is different. So you can pay attention now, and you can designate in the coding how many bars back for a particular setting do you want to pay attention to the cyclical rate, not only the rate, but also what is the trends of the overall pivots on the upper and lower side of the cyclical activity. And in this case, the cyclical activity is not breaking a pivot from within that range we're examining. Even though the upper pivots are descending, a lot of indicators with a little bit older math, older ways of looking at cyclical price would already have flipped back to purple again, and then not until right in here flip to green. This one's staying green, saying no, we're the mathematical kind of examination of price and the cyclical activity in relation of the cyclical activity to what overall direction of price is doing. We're going to stay green. So we're staying green, staying green. Now, if this would have busted that pivot and traded a little lower, this would have flipped back to purple. Just because I know that's within the the amount of bars look back that would have been involved with any sort of plot. If this was the hard right edge of your chart, if this was the hard right edge of my chart, and this, I'm right in this candlestick, but this one had pierced below, very likely would have flipped already. We would have had a down triangle. But the fact that it held, it's maintaining green. So having that capability within the indicator, which I can now take this math and add it to other indicators that have been built in the past to update and create a better capability than whatever capability the indicator had before. That's a really big thing now. Digging into and finding math that can analyze cyclical price activity and know when to consider it and when to ignore it. So let's kind of look at, how do you go about then catching large moves? Because I don't know if you guys know this, there's a few prop firms that are about to be offering swing trading. So you could literally put on a position Sunday night at the futures open and hang on to that and be in a continuous ongoing trade back and forth, long, short. So like a always in, literally till the Friday close. And then you can hold over the weekend and so on and so on. So that stuff is coming down the pipe. Now, one firm already offers it. I'm not going to name the firm in a sense. I'm waiting for some of the other firms that I've traded with. The firm that kind of offers that now, I've never traded with, and I'm not going to. I'm waiting for one of the other ones. Or, if you're trading in your own personal or corporate LLC account, like at AMP Futures, I love AMP Futures with the Tradeovate platform. Maybe you're Interactive Brokers trader with Tradeovate. With connected to your TradingView platform or whoever. You can do the same stuff. So in other words, you could do your own long, and you can go on much higher time frames. You can even put this stuff on 30-minute charts, 60-minute charts, 4-hour charts, and trade very high time frame daily charts. That's perfectly fine. The ability to adjust these tools and what's already hard coded in is phenomenal for getting stuff dialed in. And then just use AI to help you do the optimization, to get those settings. That way you're not codependent on the prop firm scalping group to hold your hand or have to hold your hand on every single different type of instrument, time frame, and trade objective you have. Just hook Claude AI. It's 20 some bucks a month I paid for it. Hook that up to TradingView Desktop. You got the tools with outputs, have at it. Go look at Bitcoin futures on 4-hour charts. Go look at the ES on 4-hour charts, 1-hour charts, or very, very large Renko charts, which is perfectly fine too. So the always in approach if you're doing swing trading, let's say you're long, you get a signal, you're long, then you get a counter signal, you're short. You'd want to flatten that out. Now, anytime you're doing quick scalping or even this catching larger moves, it does look nice on your equity curve. If, let's say, you trade in, I find mathematically I like to trade in units of 3. So you could trade like 3 MNQs, 6 MNQs, 9, so on. You get a certain amount of distance after your stop's already gone from break even to break even plus on the bigger picture move trading. And you get a certain amount of distance, take a third off, hold 2/3. Okay, in a counter position, the remaining 2/3 came out. Okay, now it's out. Now I'm short 3 units, get a certain amount of distance, a third comes out, I'm in 2/3. Now I'm long, that remaining portion of the position came out of the trade. Now I'm long. And right here I'm short. I probably just barely got the distance where I could take a third off. Okay, the other 2/3 comes off. And then, or you might do the opposite. You might trade where you take 2/3 off right away, and then you just got a little bit of runners on. If you catch a big move, catch a big move. Perfectly fine, because in the end, the Claude AI and how you set up your in-trade management, especially if you're using a beautiful tool like Trader's Post, you can kind of play with the money management after you get the most optimized settings. Maybe you want your equity curve to look like this. Some of you might be more aggressive. You don't mind a little wobble in your equity curve, but you're going for more of a max return over the most stable equity curve. Now, then there's some moves in the market you're going to sure wish you didn't take 2/3 off. You left it on. So, in the end, that's up to you. It's still a beautiful equity curve. Okay, now we're short. Now we're long, and so on. So, from signal to signal, that's called always in. Now, I have this getting all ready to be set up on some institutional trading. Well, it's already in forward testing right now. I'm just making sure the settings I'm on are the best of the best while I keep digging and looking at other Renko time frames, other minute-based time frames, range bar, just to see what's out there. But the one it's on right now is just, it's exceptionally well. So, but hey, CPI, continual process improvement. Keep looking, keep digging, see what you can come up with. Over my life, playing with stepped adaptive type moving averages, I was looking at all the ones I've had from like 10 years ago, whatever. I've had 5 different types of math now. So I'm on my 5th type of math. So just a couple months back, I was on the 4th type of math. Just recently, I found another type of math, put it in this one, had the programmer add that to this style or look of indicator, because this look of indicator works really good for doing signals. It's cut and dry. It's either flat or stepping up, or it's now down stepping and changing directions. Okay, easy to power. And then with symmetrical Renkos or even regular Renkos, it really works well. Now, this indicator loves symmetrical Renkos, but it's doing pretty darn good already with regular Renkos. So if I can get this symmetrical Renko custom bar type done, where TradingView will add it to the desktop platform, then that would kind of take things to another level. Now I can synthetically do that. I can synthetically create an indicator, but to me that's a little clunky. I'd rather just get the bar type be a custom bar type. So anyhow, trading big, these big moves to these big moves is a fantastic way to trade. Now, I'm going to shoot another video on the same topic, but you can do this. You can kind of do the same thing intraday, but when you get some of these bigger picture moves, like you're getting a trend bias signal, looking at what's going on with the momentum tool to decide if I'm going to actually take that one or not.